So Laurence, for 2025, let's look at 3 trades. Which are your 3 big trades for 2025, which could have a shelf life of 8 to 12 months?
Yeah, I mean, so one, I'll try and put this from a timing aspect, because we have seen some short-term extremes, particularly if you look at Russell 2000, if you look at Bitcoin, and you look at the S&P, that we are expecting a pullback of between 4 and 8%. But going into 2025, a pullback, particularly on the cryptocurrency space, we think it is a buying opportunity in that. So any weakness in Bitcoin back to 74,000, we think it's a buying opportunity. We've got an upside target of 130,000. So that's definitely a space that we would look at adding exposure to. If we're looking at down to the sector level, what we've seen is sort of fresh breakouts in this travel tech space, as well as the global financial services space. So those are the 3 spots that I would sort of focus on, wrapping up with Bitcoin, the fintech ETF that you can see that the trend and the breakout there, and then the travel tech ETF, which is also recently broken out. And these are major breakouts from basing patterns that have developed over the past 2.5 years.
Yeah, that's quite interesting, Laurence. 130,000 in Bitcoin, but yeah, why not? We're already at 90 in any case. But tell me, what about the commodity construct? Because that's where also a lot of these geopolitical events as well are sort of weighing heavy, much unlike what's happening with the equity markets. But what about crude? What do you foresee now in the charts there? And more importantly, the meltdown that you're seeing in the metals basket. You think the crash in copper is going to sustain if you do look at those charts?
Yeah, absolutely. I mean, so let's just deal with Brent and oil first of all. We've been range bound here for over 18 months. The bottom of the range has been the $70 to $71. Top of the range has basically been at 97. And right in the middle of that range sits the 200-day moving average, which we recently failed on a rebound in September. So very much range bound and in the bottom end of that range, with 70 being key support. If we jump over to the commodities, it's quite a mixed bag if you look at where commodity price action sits. The iron ore side has been quite weak, testing the bottom of the range. But if I look at the copper side, yes, we have corrected. We peaked in May at $5 if you look at the CMEX copper futures. But it's essentially been range bound for the past 12 months between $4 and $5. So yes, in the near term, we can retest the $4. But the evidence that we have on the chart is that support area at $4 should hold. That the 2 metals that we're most constructive on from a chart side, one is aluminium. That has been basing for the past 24 months, and we're looking for a move through the 2750 area to confirm that base. So like copper, we have seen a bit of a pullback in aluminium, but the longer term profile does suggest it's basing out. And the other one is palladium, where we've seen a 75% decline off the 2021 highs, but over the past 12 months, we've seen an important base develop there, where we think palladium prices can move up between 30 to 40% into 2025. So that's what I would look at within the commodity space.